Guys, wanted to quickly break a little news here on a deal that I mentioned last Friday, a deal that actually appeared to be falling apart at the time. This Acacia Communications, you may recall, Cisco, of course, in a deal to acquire that company at $70 a share. They've just entered a new deal to acquire Acacia at $115 a share, I can tell you, according to people familiar with the situation. That is going to be announced momentarily, is my understanding. Should be announced prior to the open of trading this morning. This has been a fascinating situation. Remember, it was on Friday when I disjointedly tried to explain what actually had occurred. They had a $70 deal. They did not get the approval they needed from the antitrust regulator in China in time under the expiration of the merger agreement. And because of that, Acacia said, we're walking. Why? Well, the group that it's a part of had risen dramatically. Its own value had risen dramatically, and it appeared to have the ability to walk. Cisco said, no, you can't do that. We're going to sue you and take you to court because we feel like we actually did get potential approval. By the way, that was very much unclear, and in fact, I don't think that that was the case. They did not get approval from SAMR, the Chinese antitrust regulator. What has occurred as a result? Well, the fact that Cisco really wanted to own this is what's occurred here, and you could argue that they had some missteps because it would have probably been possible to have renegotiated this prior to the expiration of the merger agreement at a lower price. Acacia was a strange situation because it moved up dramatically when the deal appeared to be breaking apart, which typically one does not see. And in fact, one doesn't typically see the company being acquired, the one that is actually exiting said deal. All that being the case, we can now tell you they're coming back. 115 is going to be the new price, which, Jim, goes to the point, of course, again, in terms of valuation here that we've seen, broadly speaking, in the chip sector. Remember, this was announced back in July of 2019, this deal. So it has moved up dramatically, and now shareholders obviously are going to be quite pleased that, in fact, they were in a position to get a new deal because the Chinese took so long to actually approve it, which, by the way, they still haven't received, as far as I'm aware.
David, all I can say is that's probably right. It's the right rate versus what this group has done. I don't think Chuck Robbins is making a mistake. The group is red hot, and it's necessary. Cisco needs this. Cisco's got to grow a little faster. Acacia's a really good company. That's a great story because I think a lot of people felt it was dead, and Cisco stock did not act well after they said it was dead.
Yeah, and I think your point is the key one. They really apparently needed it because if they didn't, they would have continued to go to court, see what they could work out, and or walk away. They chose not to. And obviously, it also goes to the potential strength or weakness of their case. And again, my understanding in the interregnum between reporting on this on Friday and today is they did not. You know, they used these words that they got. Cisco's submission was said to be sufficient to address the relative competition concerns from SAMR, but that wasn't approval. And in fact, it's my understanding that they may very well have known that that was not the case. And so you got a new deal. Carl did want to bring that to people again. I don't believe the release is out, but my expectation is it should be out shortly.
Shepard Smith here. Thanks for watching CNBC on YouTube.